Eurozone data, troubles in Israel, and a British banker in hot water. To discuss all the big stories of the week and how they have affected the markets, we're joined by Patrick Reid from Adamis Principle. Patrick, first up, a first quarter slowdown was seen across the Eurozone, but officials are still confident in the strength of the economy as a whole. What are your current thoughts on the state of the Eurozone economy?
It's clear to me the European CPIs and PMIs do not or did not match up to the EONIA curve. It was quite aggressively priced at June 19. It's now moving out and has moved out to December 19. This is clear. So that has led to a lot of weakness. The dollar leg has obviously helped, but I think the curve pricing is getting more aligned with the current value of spot. The second thing I'm a bit worried about was a recent request or the leak of request for a 250-yard forgiveness on debt. As you know, Italian banks are very much in debt. It's a concern, of course. It's not going to help the euro as spot trades. I see it as temporary. When nothing's confirmed or officially denied yet, but let's wait and see.
An intense political week for the US following the embassy move in Israel. How has this affected the US and the dollar, if at all?
Very sad news politically with Gaza and the embassy stories, and many deaths. Unfortunately, the dollar wasn't really affected, or fortunately, depending on how you kind of think about it. But that's the market sometimes. So no, not a real effect on the dollar with the political unrest in Israel, but. The thing that did affect the dollar, there was a slight miss on CPI. It was a breather, nothing more. Yeah, back as you were. Dollar bulls just got a better price and loaded up. So I just see this to continue. Like I said before, the key thing is yields on the 10-year at 3% or above. And the other thing to bear in mind is the 30-year at 3.25, key level. Remember that, 3.25. It's been telegraphed quite a lot. A lot of the macro guys I'm connected to, and I posted on LinkedIn on a regular basis. Many of my students always ask, what's so important about the 30-year? Everyone's talking about the 10-year. Well, the 30-year is long-term growth. It's, the curve should go from low to high. That's not always the case with the US curve, but, the US yield curve. But at the moment, it's looking very good. 10 years crack 3, 30 years toying with 3.25. And if that breaks, then the dollar tear at the moment will seem insignificant.
Ben Broadbent, the Deputy Governor of the Bank of England, was in hot water this week after describing the UK economy as menopausal. But what is the current state of the UK economy, and does the near future look positive?
Yeah, obviously Broadbent coming out with some inappropriate remarks. I don't think anyone said it wasn't true, just to note. But let's get down to brass tacks. Take a bit of a recap on the data coming out of the UK. All right, wages 0.2 off, significant. CPI 0.2 off, very significant. GDP's got wrong written all over it. Okay, this is not good. You got a BBC interview with Carney before the potential rate hike in May, which didn't happen. Not being dovish, but didn't fill me with confidence. Then the OIS curve pretty much priced out the hike. Look at cable. We're nearly 9 big figures from the highs in 5 weeks. So the first 3 weeks, huge. We're consolidating now. But it doesn't look good. I think we're going to need at least 2 or 3 decent sets of figures for us to get a hike this year. The curve is pricing in maybe one hike later on in the year, but it's not really looking good. I mean, I haven't seen August curve yet, but to be honest, another couple of bad or misses on the data, it's just pretty much stay away.
Well, a big thank you to Patrick, and thank you for watching. If you like this interview and would like to find out more, be sure to head over to dukascopy.tv.